Oh, let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Monday, the 27th of October, we got a Fed meeting coming up on Wednesday. We're expected almost 100%. We got 97.8% chance we're going to get a quarter of a point rate cut. Then we got December meeting. It's already lined up on December 10th for like a 97% or something of that nature.
No, it's 93 in December. But that's
93.
That's for an additional quarter point on top of the quarter point that's expected.
Correct.
Yeah.
So I think everybody's wondering, should I just wait till after those two Fed cuts before I start looking at locking an interest rate in? Is that going to be better for me? The fact of the matter is nobody really knows, do they? No one knows. Because if we go back into history, we have found that there's been many occasions where interest rates got worse after a Fed cut. They tend to get better just before the Fed cut.
Just before.
So really what I'm advising my clients to do that don't have to worry about, if you're under contract, then you can't play the game. Right. If you're looking to refinance, you could float it out a little bit longer if you wanted to. I think a lot of conventional clients, meaning they have conventional mortgages presently on their home that would like to refinance, need to wait till after a couple of more cuts. FHA and VA, you're already benefiting from it. Conventional loans without that insurance from the federal government just aren't quite as attractive. And it's really becoming discouraging for a lot of folks that would like to refinance. We look at the numbers and we're going, yeah, I really don't see the benefit for you right now. It's unfortunate, but it is the way it is. I think when it comes to making that decision, whether you should lock or float, it depends on what are you up against. Do you have a home that you're looking to buy? Do you need to sell? Is it going to make that much of a difference? Because even if we go back and we look at what were rates before the last two Fed cuts, even the last three Fed cuts weren't much different than they are today.
No. They did go up for a bit, and then now they're back. They're settling back down. We're sitting at about 6.2, right? 6.2.
You're sitting to average about 6.2%. And even that, when I see a conventional loan at 6.2%, you're going to pay a couple points to get a 6.2%. Where on VA, you can get into the mid fives right now. Right. Even the low fives if you want to buy it down a little bit lower. So it's just so much more attractive. Now, the veterans, as I've been saying, got to be very cautious because you don't want to keep doing it. You want to lock it and forget about it. So is now the right time? The only way to really know is let's look at the numbers, determine what your break-even period is, and then we take it from there.
Gotcha.
Now, inventory. Here's one thing that I lean against waiting, and that is that inventory is slightly shrinking. So not dramatically, but we had 5.5 months, almost 6 months worth of supply. Now we're down to about 4.5 months worth of supply. Right, you get that down to 3 months worth of supply, and we're back into a seller's market.
Yeah. Remember, 2021, we had about 3 weeks of supply. That was a very different.
I don't even know if it was really that. I think the data was shrinking so fast.
The velocity was insane. So interestingly, right now, this is a fun fact, right? So the last month we have data for is September. And September 2024, last year, we closed 2,304 homes. September 2025, we closed 2,302, literally flat, right?
Wow.
But we had increase in prices. Median went from 435 to 440. Average went from 552 to 559. So both metrics are a little bit higher.
Yep.
Days on contract is taking longer these days. It's 45 versus 33. And there's more active inventory than there was a year ago. So a year ago, it was 3.8.
That gives buyers an advantage. That's what we've been trying to tell people that are looking to buy. This is your advantage because as soon as that inventory shrinks, you might get a quarter of a point lower in interest rate, but you're going to pay a whole lot more for that house and you're not going to get the closing costs paid.
Correct. That's absolutely right. Yeah. So yeah, today, right now, people are definitely getting repairs done. They're getting rate buy downs. They're getting closing costs paid, and sometimes they're even getting a discount on the house as well.
Yes.
But I always focus on those other things first because they actually impact you more than the ultimate price of the house.
Oh, I agree. If you're putting 3.5% down and you reduce that purchase price, you reduce a price by 10 grand and you're doing an FHA loan, you only saved yourself $350. So that's not going to make a big deal. It's not going to make a big difference in your money out of pocket, where $10,000 out of pocket to cover closing costs is a substantial difference.
Absolutely. And if you have that $10,000 anyway, you could take it and stick it in the market and make some money on it.
You could do that. You'd probably be smart to do that. But a lot of people don't manage their money that way. They don't look at it that way.
Well,
and I would like to think that more people would, but they don't. So you'd be better off to have the closing costs paid by the seller, or take that extra money that you had and buy your rate down a little further so you don't have to refinance it in the future. That's an option as well.
Yeah, for sure.
And I'm
looking I did want to talk about something else.
Tell me that.
Yeah, I just completed a video on this. It's going to get posted on Sunday. But there is a massive push in the state legislature to eliminate property taxes on homestead properties. So the house that you live in, not a rental property, not a second home, not a vacation home, but if you live in the state of Florida and have a homestead property here, there is talk about eliminating 100% of that.
I hope they can find a way that won't be so painful to be able to replace it. But personally, I don't know if it's really that important. However, when you look at people that may not be able to afford their payments because their insurance went up, right? And their taxes, if you could eliminate the taxes, then that might make up the difference.
Remember, there's a whole industry, right, around tax deeds, tax certificate sales, and all that kind of stuff. There's a lot of people that struggle to get those taxes paid every year, and people have lost their home. Older folks, especially, have been kicked out of their homes by the government because they owed $3,000, $6,000, $10,000 worth of back taxes. And
that's a crime. That's a shame.
It is. It's a shame. It really is. And I think that's where the conversation started. And then it ended up with the current conversation is nobody should have to pay. Right.
But then where are you going to get the money for the police and the fire department and everything else? So what are you going to do? You're going to put a tax on your goods now, your groceries. You're going to have
remember, groceries are exempt. Groceries are exempt. But yes, there's talk about a slightly increased sales tax. There's talk about some tourist tax, some fees and things on things that tourists do. There's also a conversation about a one-time government fee for buying or selling. Not sure which side.
See, I don't like that because we already have deed stamps and we have intangible taxes that other states don't have. Now,
I get that.
But they have state taxes. So that already places a little bit of a burden on the buyer. Okay. However, now you raise that. If you had to raise your taxes or put an additional stamp on the taxes that you pay when you buy a home, if affordability is our number one issue, we didn't solve that problem.
Well, fair enough. Like I said, there's a conversation happening. I want people engaged in the conversation. To me, that's the thing, right? So the legislatures are all talking about it. There's lots of different options on the table. One of the ones that I found really intriguing, because right now our homestead exemption is only $50,000, right? So there's talk about raising that by $100,000 every year until it hits $1 million.
Okay.
Right? So that would eliminate property taxes for everybody that doesn't live in $1 million plus house, which is the vast majority of it. Leave it on people that do live in $1 million plus house, right? But it would do it over time, which would allow all the other taxes and whatever fees they're going to work out shift through the market.
Find another place to put it.
Correct.
Find another place to get it from.
Yeah. And the other thing, by the way, I'm not sure if you're aware of this, Florida has their own Doge department. Did you hear about that?
Yes, of course I have.
So Blaise Ingoglia, I think that's how you say his name, is the CFO. And he has already, with just 5 counties, he's already found $1.1 billion of BS.
Well, it surprised me. And even in Orange County, I know that
Orange was one of them.
Orange County, they were bucking the system because they didn't want everybody to find out where all the money was going.
They were trying to get an NDA signed by the state. The state's like, yeah, I don't think so. We're not signing an NDA. It's public information. And even in the state that's run fiscally conservative, our state is fairly fiscally conservative. They're finding a ton of excess waste.
And they'll find more. And now Jerry Demings wants to run for governor. And he's the one that's been hiding the money.
Yep, exactly. So it's going to be interesting. But I think the reason I brought it up, I'm passionate about it from a certain perspective. But then at the same time, imagine not having to pay property taxes anymore and how much that would help affordability.
I don't think there should be a capital gain tax on a primary residence either. So they should eliminate that.
Hey, we used to have the only one time in your lifetime. I don't know if you remember that. Up until 99, it was once in a lifetime. Now you can do it every 2+ years, 2 years in a day, technically. But so, that we're definitely better. And I think that limit could get increased as well. That would be nice. But that's more of a federal government thing than a state.
It is. So to just knock this out and just recap, first of all, we're going to get 2 more Fed cuts. We don't know how much they're going to impact interest rates. I would bet you that it will be a marginal reduction if we see any type of reduction.
Sure.
So I think people are going to look back, and by the time Christmas rolls around, things aren't going to be that much different than they are today. I'd like to see them a little bit lower. I'd like to see us start the new year with a 5 3/4% 30-year fixed rate. I think that would be the best thing that could ever happen. I just don't know if it's going to happen that soon. I do think that there's possibilities that there'll be future rate cuts if they don't get what they're expecting to get out of these 2 little dinky cuts. But everything adds up, and hopefully it'll benefit. Then if you combine that with getting rid of property taxes for homestead exemption, we could just win all the way around in Florida.
That's right.
Now we're going to get all the nut jobs moving to Florida that want to live.
100% of them. We only get 60% of the nut jobs.
We already got 60% of the nut jobs. Now we're going to get the rest of them.
Absolutely.
Hey, listen, great talk. And by the way, I can't wait to check out your new video coming out. Where do people go to watch this video that you're going to put out?
I'm on YouTube as the Florida Real Estate Insider. So it's youtube.com/ the Florida Real Estate Insider. And I'm going to have the link posted at the documents below.
Beautiful.
Comes out on Sunday at about 6 o'clock or so.
Anybody listening to this wants to know more about what is happening on the state level for property taxes, you definitely want to watch this.
Yep.
Thanks, Tom. It's always great having a conversation with you. You're very insightful. Thank you for that.
Same here, Bruce. You make it a great week, my friend.
You too.